In FY26, foreign investors sold almost $20 billion worth of Indian stocks. 20 billion. But in the very next quarter, these same foreign investors turned around and put in almost $3 billion of fresh money back into Indian stocks. And they didn't just buy anything and everything, they were very selective. So today I'll be walking you through these 10 stocks where FIIs sharply increased their holdings in the last quarter. And more than just showing you the numbers, we're going to dig into what actually changed inside these businesses that made foreign investors sit up and take notice. So stay till the end because stock number 10 on this list saw FII holding jump over 11 times in just 4 months. So let's get right into it. Stock number 1 is Shriram Finance. In just one quarter, FII holding jumped from around 45% to 55%. But the real question is, what is this business actually doing that's pulling in this kind of global money? Well, Shriram Finance is one of India's largest retail-focused NBFCs. Their whole game is lending to people that regular banks often don't bother reaching. They are offering loans for everything from commercial vehicles and cars to homes, gold, and small businesses. Now let's talk numbers because they are genuinely strong. In FY26, the AUM touched nearly 3.02 lakh crore. Total income grew 15% to around 48,000 crore. Net interest income, which is basically the core interest they earn from loans, grew 14% to around 26,000 crore. And profit after tax jumped around 21% to almost 10,000 crore. So where is the next phase of growth coming from? 3 things. First, selling more loans to existing customers. Second, using its network of 3,225 branches and over 1 crore customers more efficiently. And third, using fresh capital to grow its lending business faster. Now, there are risks. Higher borrowing costs or more loan defaults can hurt profitability. Today, Shriram Finance is valued at around 2.44 lakh crore, trading at around 2.9 times its book value. Now let's move on to stock number 2, Fedbank Financial Services, and this one has a fun little backstory. A domestic investor called True North Fund sold their entire 6.86% stake in one single block deal. And guess who bought it? Nomura Asset Management as a foreign portfolio investor. That one transaction alone pushed FII holding from almost nothing to 9.30% in the June quarter. So what do they actually do? They focus on gold loans and loan against property, both secured lending, which is a safer place to be. And the numbers back this up nicely. In FY26, AUM grew 27.5% to 20,000 crore. Disbursements jumped a massive 67% to around 31,400 crore. PAT grew around 53% and ROE stood at around 13%. So it's not just the loan book getting bigger, profitability is generally improving too. Now management believes that even if gold prices stay completely flat, the gold loan business alone can still grow 25 to 30%. To back that up, they are planning to open 200 new branches in FY27 and integrate gold loans with their secured loan business to squeeze more out of the branches they already have. But there are risks too. Fedbank is still quite concentrated geographically. Nearly 76% of their AUM comes from just 5 states. So if any of those regions runs into trouble, it can hit the whole business. The market currently values Fedbank at roughly 2 times book value with a market cap of around 5,649 crore. Now let's move on to stock number 3, Lenskart Solutions. In FY26, Lenskart conducted 23.8 million eye tests. And nearly 50% of those people were getting an eye test for the very first time in their life. Think about what that actually means. Lenskart isn't just fighting other eyewear brands for market share, they are growing the entire market. Every first-time eye test brings a brand new customer into organized eyewear. And that's exactly why their business model feels so different from a regular optical store down the street. Lenskart controls almost every step of the chain. Manufacturing, lenses, eye testing, their omni-channel stores, the gold membership program, even after-sale service. This is exactly what FIIs are picking up on. In the June 2026 quarter, FII holding jumped from 4.26% all the way to 12.76%. Financials were strong too. FY26 revenue grew 32% to around 9,000 crore. Adjusted PAT jumped a whopping 148% to 530 crore. Management wants to turn Lenskart from a consumer tech company into a consumer AI company in FY27. Remote optometry, AI-led eye testing using movement and demand data, they call it IQ, to pick new store locations plus smart glasses. All of this could bring in new customers while also making the whole operation more efficient. The long-term goal is honestly massive. 100 million eye tests and eventually organized vision care for 1 billion people. So what you need to monitor is, can they execute this aggressive expansion without any issues? Will the AI investments actually pay off? And can earnings growth keep up enough to justify what clearly is a premium valuation? Today, Lenskart trades at 11.2 times sales with a market cap of around 96,655 crore. Now let's move on to stock number 4, Paras Defence and Space Technologies. The company operates across precision optics, anti-drone systems, space technologies, and now semiconductors. They handle the entire chain themselves: design, precision manufacturing, integration, testing, all of it. In FY26, 46% of revenue came from defense engineering, 42% from optics and optronic systems, and 12% from their subsidiaries. That's a genuinely diversified portfolio across technologies that are hard for anyone to just walk into. A few weeks ago, a Paras Defence subsidiary announced a 6,000 crore semiconductor assembly and testing project in Madhya Pradesh. And it looks like this positioning is landing well with institutional investors. In the June 2026 quarter, FII holding rose from around 5% to 8.3%. FY26 revenue touched 477 crore. EBITDA grew 26% to 120 crore and PAT jumped 19% to 90 crore. By March 2026, the order book stood at 986 crore. That's roughly 3 years of revenue already logged in. In simple terms, the existing business is generating enough cash to fund future expansion, while the semiconductor, anti-drone and space businesses sit on top as extra upside. The key risk here is execution and the new semiconductor project, which is going to be a real test of both execution and capital discipline. Today, Paras Defence has a market cap of around 9,600 crore, trading at a PE of 114. Now let's move on to stock number 5, Pine Labs. In the June 2026 quarter, FIIs raised their stake in Pine Labs from 4.8% to 9.5%. Now, most people think of Pine Labs as just the company that makes those payment machines. But the reality is they've been quietly building an entire e-commerce ecosystem on top of payments. And the scale is massive too. Over $194 billion in transactions processed in a year, more than 11 lakh merchants and 20.3 lakh digital checkout points. And it's showing up in the numbers too. FY26 PAT reached 113 crore, adjusted EBITDA grew 21%, and operating cash flow improved to 395 crore. Management has guided for another 21 to 24% revenue growth in FY27, with margins expanding further. The next set of growth drivers are already taking shape. Check out through Shopflow, affordability solutions, merchant tools, analytics, cross-border commerce, and embedded financial services. These are all layered on top of what they already have. So the goal is simple: bring in new merchants and earn more from the ones already on the platform. The risk to watch here is regulation. Pine Labs has a market cap of around 16,808 crore, trading at 6.35 times sales. Now let's move on to stock number 6, JSW Infrastructure. It is in the ports and logistics business. They handle iron ore, coal, steel, containers, liquid cargo, and beyond ports, they are building out rail connectivity, container freight stations, and inland container depots. By FY30, management wants to more than double port capacity from around 186 to 400 MTPA. That gives them a long runway to handle a lot more cargo and a lot more future revenue and cash flow. Beyond ports, they are now building out an integrated logistics platform. This is giving investors real growth visibility. Management is targeting consolidated revenue of around 10,800 crore and EBITDA of 5,000 crore by FY28. Now here's something really important. In June 2026, the company raised 7,500 crore through a QIP, mainly to fund a massive 39,000 crore multi-year capex plan for all these growth projects. Promoter holding dropped from around 84% to around 74%, and public shareholding rose to around 26%, which actually brought the company in line with SEBI's minimum public shareholding rule. And thanks to this fundraise, we saw some serious global participation. In Q1 FY27, FII holding in JSW Infrastructure rose from 6.9% to around 11.2%. But here's what to keep an eye on. The company plans to invest 25 to 30,000 crore over the next 5 to 6 years. If these projects get delayed or cargo volumes don't grow as expected, profits and cash flows could come under pressure. Today, JSW Infrastructure has a market cap of around 75,000 crore, trading at 48.5 times earnings. Let's move on to stock number 7, Multi Commodity Exchange of India or MCX. In India's commodity derivatives market, over 99% of market share in bullion, base metals and energy belongs to a single company, that's MCX. FII stake jumped from 26% to almost 30% in just the last quarter. The business model here is simple. MCX earns a fee on every single transaction. So the more trading activity that happens on the exchange, the more MCX makes. And daily transactions have been climbing steadily, which is directly fueling this growth. In FY26, operating revenue more than doubled, up 107% to around 2300 crore. Profit after tax jumped 138% to 1300 crore. According to management, product innovation, new contract frameworks and rising participation from both institutions and retail investors are structurally improving trading activity, and that could keep supporting long-term growth. But there are risks too. Its earnings lives by trading volumes. If commodity market activity or volatility cools off, revenue growth slows down. And regulatory changes from SEBI can also shake things up here. Right now, MCX has a market cap of around 69,000 crore, trading at around 52 times earnings. Now let's move on to stock number 8, IOL Chemicals and Pharmaceuticals. This isn't just the world's largest ibuprofen manufacturer, but the only fully backward integrated player in that entire segment. They basically control the whole production chain themselves, and this company isn't some giant global pharma name. It's a Punjab-based business called IOL Chemicals and Pharmaceuticals. Today, they are counted among the top global ibuprofen producers, and they also make ethyl acetate, isobutyl benzene, acetic anhydride, and some newer specialty products. In December 2025, their holding was around 2%. It actually dipped slightly to 1.72% by March 2026, but by June 26, it actually jumped up to 4.87%. So there are three key things worth watching going forward. First, the company is reducing its dependence on ibuprofen, where demand is weak and competition is high. Non-ibuprofen products made up just 18% of revenue in FY21. Today, that's up to 37%, and management wants to increase it further. Second, the company has approvals to sell its products in markets like the US and Europe, creating a better export opportunity. And third, it has acquired 101 acres of land next to its existing plant. As it gets more approvals, it can use this land to expand manufacturing. Recent performance has been encouraging too. FY26 revenue grew 11.5% to around 2300 crore. Profit after tax jumped 36% to 138 crore. Around 76% of revenue comes from the domestic market and 24% from exports, which is a fairly balanced mix. The key risk here is that the company still depends heavily on just two products, and if raw material costs increase or supplies from China are disrupted, margins and profit could be hit. IOL Chemicals has a market cap of around 4,380 crore, trading at close to 30 times earnings. Now let's move on to stock number 9, Senores Pharmaceuticals. India's API market, that's the raw materials used to make medicines, is expected to grow at 8.5% annually and reach $7.1 billion by 2028. Senores Pharmaceuticals is chasing exactly this opportunity. They are planning to scale up their API manufacturing capacity from 25 to 169 MTPA. Their real strength is developing complex pharma products for regulated markets like the US, Canada, and the UK. But they are not putting all their eggs in one basket. They also serve over 40 emerging markets, have their own generic portfolio, and run contract manufacturing and development businesses. That gives them multiple engines of growth instead of just one. This diversified approach is probably why FII interest has been climbing up. FII holding jumped from around 3.6% in March to 6.62% in June 26, nearly doubling in a single quarter. A big strength is its regulated market business. In FY26, 64% of its income came from the US, Canada, and the UK. It has 51 US drug approvals, 21 products already on the market, and 27 more expected to launch in the future. The numbers also reflect this momentum clearly. In FY26, total income grew 62%, EBITDA grew 96%, and PAT grew a massive 108%. Operating cash flow improved too, which is a genuinely encouraging sign of earnings quality. Management's next focus is expansion. If you're tracking this stock, keep a close eye on the regulated markets business, since that's 64% of their income. Senores Pharmaceuticals has a market cap of around 6,390 crore, and the market is currently valuing it at about 55.4 times earnings. Now let's move on to the last stock on this list, which is ideaForge Technology. FII holding went from 0.73% in March 26 to 4.89% in June, and then to 8.27% in July. That's more than 11 times growth in just 4 months. ideaForge makes drones used for surveillance by the defense forces and security agencies. It develops most of the critical technology itself, including autopilot and navigation systems. In Q4 FY26, it also started deploying drones that can better operate in electronic warfare environments. This technology is now translating into real orders. In FY26, ideaForge posted its highest ever annual order inflow at around 530 crore, and they kicked off FY27 with an order book of about 310 crore. Defense contributed 69% of FY26 revenue, which gives them decent near-term visibility. The momentum shows up in the financials too. They generated 131 crore in gross profit in FY26 with a healthy 58% gross margin. There was improvement at the operating level as well, though profit after tax was still negative 17 crore for the year. Right now, ideaForge has a market cap of around 4,273 crore, trading at roughly 18.9 times sales. That said, there are risks too. Near-term visibility comes from 310 crore order book, but growth beyond that depends heavily on new defense procurement orders and tender wins. So these were the 10 companies, 10 very different stories, and in every single one of these, FIIs sharply increased their holdings last quarter. One thing is clear. FIIs are becoming more confident about the long-term potential of these businesses, but whether that confidence pays off depends on one thing. Can these companies keep delivering strong earnings and execute their plans? That's what investors should watch closely. FII activity can point you in a direction, but it should never be the only reason you hit buy. Always look at business quality, valuation, and risk together before making that call. If this video helped you see any of these stocks a little differently, go ahead and hit like and subscribe for more such videos. Now tell me which of these 10 stocks would you like us to cover in detail. You can drop it in the comments. We read each one of these. See you in the next one.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.